Good morning. In my previous video, we discussed about all the basics aspects of accounting, such as we discussed introduction to accounting. Later, we discussed what is the meaning of financial accounting. Later, we discussed what are the objectives of accounting. Then we discussed about scope of accounting or features of accounting or functions of accounting. We discussed these 7 important points. Yeah. Then we discussed about accounting process. As we all know that accounting, it is a wider concept which is consisting around 7 important functions. So we define accounting as a process of identifying, measuring, recording, classifying, summarizing, analyzing, and interpreting and communication of financial information to stakeholders for taking economic decisions. This particular concept is called as accounting, and these are certain objectives behind practicing of accounting, such as every companies will practice accountancy for ascertaining the profit or loss of the business, or they will practice this accounting in order to know their financial position and to know their sources of revenue and items of expenses. They will practice accounting, and at the same time every companies will practice accounting in order to communicate reliable and relevant information to their stakeholders. So these are some of the important objectives behind practicing of accounting. And these are 7 important functions of accounting, such as first one is identifying, it is nothing but recognizing the business transaction. Second one is measuring, it is nothing but adding monetary value to the business transaction. Then third one is recording, it is nothing but entering the business transaction in the book of journal. And fourth one is classifying, it is nothing but preparation of ledger account with the help of journal. And fifth one is summarizing, it is nothing but preparation of trial balance with the help of ledger account. Then sixth one is analysis and interpretation, it is nothing but preparation of final accounts of the company. And the last one is presentation of such financial statements or final accounts before the stakeholders is known as communicating. So these are 7 important functions of accounting. Further, yeah, it is all about the 7 important functions, and it is about accounting cycle. As we all know that there are 5 phases in accounting cycle, which is begins with business transaction, followed by preparation of journal, then followed by preparation of ledger, then preparation of trial balance, and ends with preparation of final accounts or preparation of financial statements of the company. Yes. Today, in this class, we are going to focus on certain important basic terms that are used by accountants in day-to-day accounting practice. Yeah, these aspects are very important, and let's discuss these all basic terms along with examples. Here, first term is entity. Here, entity is nothing but the individual recognition or identity, or you can say definite existence or separate existence is called as entity. Here, we in as far as accounting is concerned, we are not supposed to treat owner and business are one and the same. Here, both are two separate entities. It means owner is one entity and the business is another entity. As far as accounting is concerned, at any cost, we are not supposed to treat the business enterprise and the person one who owns that business enterprise are one and same. Here, business is one entity and the person one who owns that business is another entity. So, entity is nothing but definite existence. It is nothing but own recognition. So, in society, every companies, every institutions will have their own existence. They will be having their own identity. They will be having their own recognition. That is called as what? That is called as entity. Here are some of the examples for entity, like Infosys Limited. Who is the founder of Infosys? Narayan Murthy. As far as accounting is concerned, we are not supposed to treat Narayan Murthy and Infosys are one and same. Here, as far as accounting is concerned, both Narayan Murthy and Infosys are two separate entities. We need to maintain two separate accounts in the name of each entity. Like one is Narayan Murthy's account and another one is Infosys Limited's account. Yeah, here every business organizations are treated as they are treated as you can say that they are treated as artificial persons. They are having their own recognition in society. That is called as what? That is called as entity. Then the second basic term is business transaction. What is business transaction? Here, first of all, business means economic activity. They are nothing but exchange activities. So here business transactions means the exchange activities that will take place in ordinary course of business or in the day-to-day life of the business, they are called as business transactions. Or you can say the economic activities of the business are called as business transactions, like purchase raw materials, then sold finished goods, wages paid, salary paid. These all are business transactions where the exchange will involve. Where the exchange will involve. Either we are going to exchange goods and services with customers, or we are going to exchange some monetary benefits and services, meaning we will obtain service from other people and we will pay money to them. That is what that is business transaction. So business transaction is nothing but economic activities of the business. These are nothing but exchange activities of the business. The activities that involves exchange of money or money worth, they are called as what? They are called as business transactions. Actually, there are two types of business transactions. One is cash transaction and another one is credit transaction. One is cash transaction and another one is credit transaction. What is the meaning of cash transaction? If the value of transaction is settled immediately on the spot, that kind of transactions are called as cash transaction. For example, we purchased raw materials. Immediately we made payment to the supplier. That is called as what? That is called as cash transaction. So it is a type of business transaction where the cash is paid or where the cash is received immediately, or in very simple words, if the value of transaction is settled, that is whether it is received or paid immediately, that kind of transactions are called as cash transactions. Then next one is credit transactions. What is the meaning of credit transaction? Here there will be a delay in payment, that it may be receipt or it may be payment, but there will be some delay. That kind of transactions are called as credit transactions, meaning it is a kind of transaction where the value of transaction will be settled on some future date. It may be receipt or it may be payment, but it will take place on some future date. That kind of transactions are called as credit transaction. You can see the meaning of credit transaction. It is a transaction where the value of transaction is not settled immediately, but its settlement is postponed to future date, is called as what? Is called as credit transaction. So we will find two types of transaction. It may be cash transaction or it may be credit transaction. Okay, let us move to next term, a very important term, capital. What is capital? Capital is nothing but the money invested by owner, the money or money worth invested or introduced by owner at the time of commencement of business. At the time of commencement of business is called as what? Is called as capital. That we started a company and we invested around 50 lakh rupees with that company. That 50 lakh rupees is called as what? Is called as capital. We may invest money or we may invest money worth. Sometimes we will invest our assets into our business. That is also called as what? That is also called as capital. So capital is nothing but the money or money worth which is contributed or invested by owner into the business is called as what? Is called as capital. Then the next term is drawings. What is the meaning of drawing? Actually, drawings is opposite to capital. Opposite to capital. If owner brought money into the business, is called as capital. Suppose if owner has taken money from the business for his personal use, is called as what? Is called as drawings. That is the reason I told that drawings is opposite to capital. So what is the exact meaning of drawings? The money or money worth which is withdrawn by owner from the business for his personal use or for domestic use is called as drawings. Here, owner he will take some money from business, or he may take a money worth from the business, his personal use or his private use or for his domestic use is called as what? Is called as drawings. And drawings may be defined in another way also, like if any of the personal expenses of owner are paid by business, if any of the personal expenses of owner or private expenses of owner are paid by the business is called as what? Is called as drawings. For example, electricity bill of owner's house is paid by business is called as what? Is called as drawings, because electricity bill of residential house is personal expenditure, it is not a business expenditure. but such personal expenditures are paid by business is called as what is called as drawings. You can take one more example. Owner is having a textile business and he will take some cloths material for his personal use or for his family use. Then you cannot consider it as a business transaction. It is completely a private transaction of the owner. Such kind of transactions are called as drawing. So it may be money or money work which is withdrawn by owner from business for his personal use or for his domestic use is called as drawings. Or if personal expenditures of the owners are paid by business are called as drawings. Yeah, it is about drawings. Then the next important term is assets. The next important term is asset. What is the meaning of asset? Assets are nothing but properties owned by the business. The properties and possessions that are owned by business are called as assets. For example, business will be having its own land, building, it will be having certain machineries, there will be certain furnitures, there will be some vehicles, and they will be having some other items like you can say they will be having some kind of fixtures, they will be having some kind of intangible aspects. Those all are called as what? Those all are called as assets. Assets are nothing but properties that are owned by the business. They are called as assets. Yeah, here assets are actually classified in two categories. One is fixed asset and another one is current asset. One is fixed asset and another one is current asset. What is a fixed asset? The name itself it indicates fixed means it will remain with the business for a long period of time. That kind of assets are called as fixed asset. In other words, the assets that are purchased for use, the assets that are purchased for use in the ordinary course of business, they are called as assets. They are called as fixed assets. For example, we will purchase machinery for what purpose with an intention to use it for 5 years or 10 years. So such kind of assets are called as what? Fixed assets, meaning the assets that we will hold on long-term basis. That is for a period of more than 1 year or for a period of more than 3 years. That kind of assets are called as fixed assets. Will purchase land, will purchase building, will purchase furniture, and will purchase certain machineries, plants, etc. For what purpose these all things are purchased? These are purchased for use in the ordinary course of business, and we are going to use it over a period of time. We are going to hold these assets on long-term basis. That is for a period of 1 year or for a period of more than 3 years. That kind of assets are called as fixed assets. Then next asset is current asset. Actually, current assets are those assets which are held on short-term basis or which are held by business on short-term basis. That kind of assets are called as current assets. In other words, the asset which can be get converted into cash within a very short period of time, that kind of assets are called as current assets. These are also known as liquid assets of the firm. You can take example for current assets like cash. Cash is a current asset which we are not going to hold it for a period of 5 years or for a period of 10 years. That within a month or within a year we are going to invest that cash with business activities. You can take example of bank balance. That is also one of the current asset. We are not going to hold balance with bank for a long period of time. We are going to utilize it for business purpose. You can take example of stock. Stock is nothing but the unsold goods that are there with the business. They are called as a stock. We are not going to hold such kind of unsold goods for a long period of time. We will sell them within a month or within 2 months or within 3 months. That kind of assets are called as current assets. So current assets, actually these are the assets which are held by business on short-term basis, which are held by business on temporary basis. That kind of assets are called as current assets. So what are the examples for current assets? Cash is the best example. The most liquid asset of the business is cash. Then next example is bank balance. Then you can take example of stock, that is stock of finished goods, meaning which are produced but which are not yet sold. So company is going to sell them within a month or 2 months. So that kind of assets are called as what? They are called as current assets. Yeah, it is about assets. So asset is a very simple concept but very important concept. Asset is nothing but the properties held by the business. It may hold those properties on long-term basis or it may hold it on short-term basis. If any of the properties are purchased for use and if business holds such kind of assets on long-term basis, such kind of assets are called as fixed assets. And if any of the assets are held by business on short-term basis, or you can say any of the assets which company can get converted into cash within a very short period of time, such kind of assets are called as what they are called as current assets. So like this, there are two types of assets. There is one more classification for asset, that is tangible assets and intangible assets. Tangible assets are which we can see and which we can touch. That kind of assets are called as a tangible assets. Example is land, building, furniture, plant, machinery, etc. These all are best example for tangible fixed assets. Then examples for intangible fixed assets are goodwill of the firm, that is reputation of the firm, the patents, copyrights. These all are best example for intangible assets. So asset may be classified as fixed assets or current assets. It may be classified as tangible assets or intangible assets. Okay. Let us move to sixth important term, that is liability. Now, what is the meaning of liability? Actually, liability is opposite to asset. It is opposite to asset. Yes. So, what is the meaning of liability? Liability means the debt owned by the business, or you can say the loan taken by the business, or you can say the money that business need to pay, the money that business need to pay to outsiders is called as what is called as a liability, is called as a liability. For example, we will take loan from banks, it is called as a liability. It is our debt. Debt is nothing but obligation to pay. We need to pay principal amount, along with the principal amount we need to pay interest. That kind of financial obligations are called as what? They are called as liabilities. Liabilities are nothing but debt owned by the business. So you can see the meaning of liability, the amount owed by the business organization to outsiders, meaning the money that business need to pay to outsiders is called as a liability. In other words, the debt owned by business is known as liability. Yeah, here are some of the examples for liability, like loans, bills payable. What is the meaning of bills payable? We are taken some money from somebody, or you can say somebody has supplied goods to us on credit basis. We need to pay money to them. That is called as what? Bills payable or sundry creditors. And outstanding expenditures are also best example for liabilities. Outstanding expenditures means expenditures are incurred but they are not yet paid. We have to pay it in future. That kind of obligations are called as what? They are called as liability. So liability, in very simple words, it is a debt owned by the business. It is a loan taken by the business. It is an obligation to pay. That is called as what? That is called as liability. In other words, in very simple words, the amount owed by the business organization to outsiders is known as a liability. The best example is loan, outstanding expenditures. You can take example of outstanding salary. One of the best example for liability. Outstanding salary means we have taken work from employees but we not yet paid them salary. We should pay it and we are going to pay it in future. This kind of obligations are called as what? They are called as liability. Here, liabilities are also classified in two categories, like internal liabilities and external liabilities. Internal liabilities means, as I told you people while telling about entity, owner is different and business is different. So since owner is different, whatever investment he had made with the business, it should be repaid to him at the end of the, or you can say once the company is liquidated or winding up. At that time, we need to repay his capital. So the liabilities that are belongs to owners are called as internal liability, and the liabilities that are belongs to outsiders like banks, cooperative societies, etc., they are called as external liabilities. It is all about liabilities. Liability is nothing but the money that business need to pay to outsiders. The debt owned by the business is known as a liability. There are two types of liability, internal liability and external liability. Best example for internal external liability is capital. One day we need to repay that capital to owner because he is different and business is different. Then external liability is, you can take example of debentures, or you can say loan taken from financial institution. One day we need to repay that loan along with interest. That is what? That is external liability, outsiders liability. Yes, it is all about liabilities. Then the next term is debtors. Yeah, another very important term. Actually, the term debtors and creditors are usually used in case of credit transactions. They are usually used in case of credit transaction. What is the debtor? What is the meaning of debtors? Or who is a debtor? Who is a debtor? See here. First, I wish to give an example to you. Debtor means they are usually customers to whom we will sell goods on credit basis. We will sell our goods to customers on credit basis. Those customers will become our debtors. Those customers, they will become our debtors. In very simple words, the person one who need to pay money to business. The person one who need to pay money to business, that person is called as a debtor. Or in very simple words, the person one who has taken certain benefits from the business without making immediate payment. The person one who has taken certain benefits from the business without making immediate payment, that person is called as a debtor. A person has purchased goods from our firm, but he not yet made a payment. He is going to make a payment after a month or after 2 months. That particular person is called as a debtor. Understood? It is debtor is whom? Debtor is a person one who has taken certain benefits from the business without making any payment, without making immediate payment. That particular person is called as a debtor. In very simple words, the person one who need to pay money to business, that person is called as a debtor. Yeah. Then next one is creditors. What is the meaning of creditors? Here debtor means the person one who need to pay money to business, that person is called as a debtor. Now creditor is opposite. Creditor is nothing but, creditor is a person to whom business need to pay money. Creditor is a person to whom business need to pay money. In other words, creditor is a person from whom business has taken certain benefits, from whom business has taken certain benefits without making payment or without making immediate payment. That person is called as a creditor. Creditors are usually suppliers who had supplied goods to firm, on credit basis. On credit basis, they are our creditors. So it is all about seventh term, that is debtors, and eighth one, creditors. Usually both the terms comes in case of credit transaction. Assume that we are a business and we sold goods to our customers on credit basis. That customer will become our debtor. So a person one who has taken certain benefits from the business without making immediate payment, that person is called as debtor. Who is a creditor? Creditor is a person one who extended financial assistance, or you can say a creditor is a person one who had provided credit assistance to firm, or one who extended credit facility to firm. That particular person is called as what? He is called as creditor. He is a person from whom business has taken certain benefits without making immediate payment. That person is called as creditor. Then the next term is goods. What is the meaning of goods? What is the meaning of goods? See here, the commodities that are produced by business for sale. The commodities that are produced by business for sale, or the commodities which are purchased by the business for resale, they are called as goods. They are called as goods. In very simple words, the commodity that is regularly traded in business, the commodities that are regularly traded in business, they are called as goods. Traded is nothing but the commodities that are regularly exchanged in business, they are called as goods. Very simple concept. The commodities that are produced is nothing but the commodities that are manufactured for sale. The commodities that are purchased for resale, they are called as goods. We'll take some example. Sugar factory will produce sugar. For what purpose? For selling purpose. So that sugar is called as what? It is called as goods, meaning the commodity which is produced, which is manufactured for sale, and the commodity which is purchased for resale. You can take example of grocery shop. Sugar is goods because it is purchased for resale. It is purchased for resale. They are called as what? They are called as goods. So once again, the commodities which are produced for sale or the commodities which are purchased for resale, they are called as goods. In the ordinary course of business, they are called as goods, or the commodity that is traded on regular basis in the ordinary course of business, they are called as what? They are called as goods. Hope you people understood ninth term, that is goods. Yes. Let us move to the next term. Next term is purchases. What is the meaning of purchases? Here, business organizations will purchase certain commodities for production purpose, or they will purchase it for resale purpose. Purchase it for resale purpose, they are called as purchases. See here, the term purchases is specifically used in case of goods. Specifically used in case of goods. The term purchases, and even you can take sales. The term purchases and sales, they are only applicable to goods. They are not applicable to any of the assets of the firm. For example, you purchased a machinery. You cannot call it as a purchases because machinery is not a goods. It is a asset. So the term purchases and sales are used only in case of goods. So let's see what is the exact meaning of purchases. The goods that are purchased by the business for production purpose. The goods that are purchased by the business for production purpose or for resale purpose are called as purchases. Are called as purchases. You can see the meaning of purchases. The goods purchased by the business for production or for sale in the ordinary course of business are called as purchases. We will purchase raw materials for production purpose, and sometimes we will purchase certain finished goods for resale purpose. They are called as what? They are called as purchases. You can take example of this sugar in kirana store, that a owner, he will purchase sugar for resale purpose. He can call it as what? He can call it as purchases. Suppose if he purchased a weighing machine to use it in grocery shop, you cannot call it as a purchases because weighing machine is not a goods, it is a asset. Weighing machine is not purchased for resale purpose, it is purchased for use. Understood? So the term purchases is only applicable in case of goods. In case of goods. So the goods purchased by business for production purpose or for resale purpose, those those are called as what? They are called as purchases. They are called as purchases. Okay. Then the next term is the sales. What is the sales? The goods sold by the business. Goods sold by the business, they are called as sales. Here, for example, grocery shop is there. He is selling all grocery materials, kirana materials. You can call it as a sales. Suppose if he sold his weighing machine due to some reasons, or suppose if he sold his old furnitures due to some reason, you cannot call it as a sales because the term purchases and sales are only applicable to goods. They are not applicable to assets. So once again, I will repeat what is the meaning of purchases. The goods produced or the goods purchased by business for production purpose or for resale purpose, they are called as what? They are called as purchases. And the goods that is sold by business in the ordinary course is called as what? It is called as sales. Keep in mind, the term purchases and sales are used only in case of goods. They are not used in case of assets. They are not used in case of assets. So, yeah. Let us move to next aspect. Next one. Yeah. Next one is stock. What is the meaning of stock? What is the meaning of stock? See here, I was giving example of stock in connection with current assets. Here, stock means unsold finished goods. Unsold finished goods. Or you can say unused raw materials. Unused raw materials. At the end of the accounting year, at the end of the accounting year, they are termed as stock. They are known as stock. For example, in the year 2020, we have produced around 10,000 units of goods. We have produced around 10,000 units of goods. We may not be in a position to sell all 10,000 units in 2020 itself. Might be we will sell around 9,000 units. So 1,000 units that are remaining in the year 2020, those finished goods are called as what? They are called as stock. So unsold finished goods. And unused raw materials. Unused raw material means we have purchased around 10,000 tons or 10,000 units of raw material. But out of 10,000 units, we have consumed only 8,000 units. Still 2000 units are in store. They are in store. So those 2000 units, that unused raw materials, they are called as what? They are called as stock. So very simple aspect: unsold finished goods or unused raw materials at the end of the accounting year. At the end of the accounting year, they are called as what? They are called as stock. Here, actually, business will produce goods in a very huge quantity, but it is not able to sell those all goods in a particular accounting year only. Understood? So, certain goods will be remaining with the business, certain raw materials will be remaining with the business. Such kind of unused raw materials and unsold finished goods, they are known as stock at the end of the accounting year. Yeah, it is about stock. Then the next item is revenue. Next item is revenue. What is the meaning of revenue? Yes. See here, the amount earned by the business by selling its products or by rendering its services. Amount earned by the business by selling its products or by rendering its services is called as revenue. In very simple words, revenue is nothing but turnover of the business. Turnover of the business. Actually, revenue, it includes two things. One is expenditure and another one is profit. For example, we produce one goods by spending around 80 rupees and we'll add 20 rupee profit to that 80 rupee. We'll sell that particular product for 100 rupees. So the entire 100 rupee is called as what? It is called as revenue. Revenue is not just a profit. It is a wider concept than profit. Revenue includes two things. One is expenditure and another one is profit. So the money that is earned by the business by selling its goods or by rendering its services is known as what? It is known as revenue. It is the turnover of the business. The turnover of the business is called as what? Is called as revenue. That entire turnover, we cannot call it as a profit, because turnover, it includes expenditure plus profit. Expenditure plus profit. So that is the term, that is revenue. Revenue is nothing but amount earned by the business, money earned by the business by selling its goods or by rendering its services is known as revenue. Then let us move to 14th term, that is profit. What is the meaning of profit? Here profit means excess of revenue over related expenditure. Excess of revenue over related expenditure. Just now I gave an example. Like we spent around 80 rupee to produce a commodity. And for that 80 rupee, we added 20 rupee profit. Altogether, we made 100 rupee and we are selling that particular product for 100 rupee. Entire 100 rupee is known as what? Entire 100 rupee is known as a revenue. So, in order to earn this 100 rupee revenue, we spent 80 rupee. We spent 80 rupee. That 80 rupee is known as what? 80 rupee is known as expenses. Difference between that 100 rupee and 80 rupee is 20 rupee, which is known as profit. So profit is nothing but the excess of revenue. Excess of revenue. In this example, revenue is 100 rupees. So excess of revenue over its related expenditures. Related expenditures are how much? They are 80 rupees. So excess of revenue over related expenditures of a particular accounting period is called as what? Is called as profit. For example, in the year 2019, we spent almost 10 lakh rupees in our business and we earned around 12 lakh rupees. So expenditures are 10 lakh rupees, revenue is 12 lakh rupees. So 12 lakh minus 10 lakh, 2 lakh rupees is what is profit. So excess of revenue over related expenses is known as what? It is known as profit. It is known as profit. Yes. Let us move to next term. The another important term, gain. Actually, there is a huge difference between the term profit and gain. Keep in mind, revenue is not a profit. Revenue is total turnover of the business. Total money received by business by selling its goods and services is known as revenue. Profit is a part of revenue. Even expenditure is a part of revenue. Usually, revenue is made up with both expenses and profit. Expenses and profit. Okay. So let's discuss what is the meaning of gain. See here, if you are making any of the incomes through your regular activities, it is actually called as profit. It is actually called as what? It is called as profit. If you are earning any income, if you are generating any income through regular activities of the business, usually it is called as what? It is called as profit. Suppose if you earned any of the income through any of the irregular activities of the business, through any of the irregular activities of the business, they are called as what? They are called as gain. They are called as gain. For example, you received around 1 lakh rupee cash prize from Government of India for the quality of products that you have produced. For the quality of product that you have produced. That 1 lakh rupee, you should not call it as a profit. You should call it as a gain because it is generated through irregular transactions of the business. See here, if any of the income is generated through regular transactions, of the business, such things are termed as profit. If you earned any amount or any income through irregular activities of the business, that is called as what? That is called as gain. Cash prize received from Government of India, Government of Karnataka is the best example for gain. And you can take one more example, profit on sale of asset. That you are having one old asset and you sold it, and at that time you earned around 10,000 rupee income. That 10,000 rupee income is called as gain. You cannot call it as a profit. Why you cannot call it as a profit? That selling of old asset is not your business. Otherwise, that old asset will become your goods. It cannot be termed as a asset. So, see here, if you are making any of the incomes through irregular transactions or through irregular activities of the business, such kind of irregular incomes are called as what? They are called as gain. They are called as what? They are called as gain. Yes, it is about the first 15 important terms that are used in day-to-day accounting practice. Yes, let us discuss two more terms, that is expenses and losses. Yeah. Now, what is the meaning of expenses? See here, that in business, that without spending money we cannot do anything. In order to earn any of the revenue, we need to spend some money. We need to spend some money. So the money that we will spend in the ordinary course of business, the cost that will incur in the ordinary course of business, they are called as expenses. They are called as expenses. For each and everything we are going to pay money. For example, in order to purchase raw materials, we need to pay money. In order to convert those raw materials into semi-finished goods, we need to pay money. And in order to convert those semi-finished goods into finished goods, we need to pay money. So that is the expenses that the cost that incurs in the ordinary course of business. The money that we will spend in the ordinary course of business. We will pay salary, wages, we will pay money for advertisement purpose, and even we will pay interest on loan. These all are called as what? These all are called as expenses. So expenses is nothing but the expenditures, or you can say the money that we will spend in the ordinary course of business. The cost that will incur in the ordinary course of business, they are called as what? They are called as expenses. The best example is salary paid, wages paid, raw materials purchased, advertisement